there, everyone. My name is Rina Hicks. I'm the Operations Director at Faida Investment Bank. And today we have a special episode or show or, and we will be sort of letting you in on a little bit more than we have so far. And the idea is to just kind of understand a bit more about our heartbeat as an organization and kind of the things that we do and some of the tricks that we do. And you know what? You might even get some tips for your own personal investments. So just buckle up, sit up, perk up your ears, because it's going to be a good one. And so we want to just let you in on this. First of all, the reason it's an advantage to invest in funds, and specifically the Oak Special Fund, is because we save you time. The time of checking at where are interest rates now? What's the government doing? Where is debt at? Where is inflation? All those things. You don't need to worry about them because we have a team, a whole team that worries about all of that, has sleepless nights on your behalf to make decisions on what to do. So we'll be introducing you to one of those people who has sleepless nights on your behalf. So Ian, can you just take this one away?
Thank you. For those who are watching us for the first time, Ian Kahangara is my name, Director and CIO of Global Markets in Faida Investment Bank. And today we want to open up the hood. We want actually to introduce at the back end, because I'm sure most of you have seen us with Rina and they're like, these are the two people who are operating the fund all the time, and God forbid if they even get a cold, the fund will go down. No. We've managed the back end. We have a whole team that backs us up, that is able, and we want to bring some of them in front of the camera so that they can give you reassurance and even touch on base on some of the things that we do. We have different clientele, people who want not to know anything that is happening, they just want to see a return and that's all. And there are other people who want to know, what are we investing in? What is a derivative? What is happening? What happens at the back end? And that is what we want to bring at the front of the camera so that you can understand the fund better. And with us today, I'm happy to introduce one of the senior dealers with us. Let him introduce himself, and with a clap, let's start.
Hello everyone, I'm so excited. My name is Kiambati, Senior Dealer Global Markets at Faida Investment Bank, that's Oak Fund. And I'm going to give you guys just a perspective of what we do in the dealer's room and just to try and paint the picture of the day-to-day of everything that we do to achieve the returns that you guys get to enjoy. So sit back, enjoy and relax, and let's enjoy the experience together.
Thank you. And I think we'll start with just the normal one, just to understand, because we have money market funds, we have special funds, and we have fixed income funds and other mixed funds. So for the special fund, and that's what we are discussing today, I would want you first, as Anthony Kiambati, even leave the other dealers, tell us, what do you trade in, what asset classes do you trade in, and take us just through maybe a day in the Oak team.
Okay, thank you very much, Ian. And I'm going to talk about the assets that I trade in. So I trade in what you call NSE stocks. We call them local liquidities in the dealer's room. I also trade in Euro bonds, and I also trade in the US stocks and a little bit of CFDs on a day-to-day basis. So I'm going to start by explaining how we approach it first at the beginning of the month, and then what we do on a day-to-day basis to achieve the results. So at the beginning of the month, we'll have a meeting where we try to look at, basically do a projection of what we're planning in terms of funds. What do we expect to receive in that month? And then we're like, okay, so this is what we're receiving, and these are the number of dealers that we have. So how can we distribute the income, or rather the money, to the dealers, and what is the expected return? So every dealer will have their own presentation. This is what I'm looking at for the month, and this is the expected return that I have for every asset that I'm looking at. So let me give an example. So for the NSE stocks, at the moment we have around 1.4 billion in the NSE stocks. And what we do is we distribute that among the various counters that we have. Ideally, how we go about it is we focus more on the blue chips, and that's because of the liquidity aspect of it. So ideally, you want to trade the KCBs, you want to trade the equities, you want to trade the Safaricom's, because they tend to be more liquid. And when I say more liquid, I mean it's easier to exit and to enter KCB as compared to other counters in the NSE. Had Ian talking about the NSE is up 40%. Why why are we not up 40%? And I want to answer that question. And I think some of the things I will say will be able to answer that question on why we're not up 40% on the NSE. So going back to the aspect of liquidity, we invest specifically, especially for equities, we focus more on the liquid counters. So that would be KCB, let me say banks, and we can say EABL and Safaricom. So that's on the equities. Let me talk about bonds. So for bonds, specifically Euro bonds, the play is usually different. So for most investors, they'll buy bonds for the coupon. And for the coupon, I talk about a coupon is, a bond is a debt instrument. You're basically buying or investing in a bond to receive some interest. You are loaning the government to receive an interest, what you call a coupon. But on our end, what we do is we do it differently. We call it a play on yield. So a bond has two aspects. So we have the yield and we have the coupon. So the coupon remains the same, but the yield tends to change throughout the period of that bond. So what we'll do, we'll not buy the bond and hold it for the coupon. We'll buy the bond and try to trade it for the yield. So what happens is, as the interest rates go down, the yield of the bond will tend to drop. And let me compare that, give a comparison of that to the equities market. That's the stock market. You want to buy Safaricom at 25 and sell Safaricom at 30. But in the bonds market, it works differently. You want to buy at a higher yield and sell it at a lower yield. So we'll buy a bond at a yield of 13% and look to sell it at a yield of 10%. So that's how we trade bonds. So our play on bonds is not a play of coupon, but a play on yield. Now let me talk about US stocks. So
I want to go back just a bit because I know the question still lingers. 47% return on NSE, all share index, and we are not doing 47%. And you said about liquidity. And I wanted you to expound because I have a report here that was done on the top gainers actually for the market for year to date. I see one is Samia Africa with 517%, Home Africa 235%. Why aren't you investing in it? KPLC 190%, Kenya Re 146%, and if I may look at what you're saying, you mentioned KCB is at 36%. If I look at maybe, you said Safaricom?
Yeah.
Safaricom at 69%. So I feel like you have selected the shares that are not doing so well, and you should have taken the ones that are doing 500.
Oh, for sure.
For the audience, kindly explain.
So let me explain how the NSE works, and you'll find that in as much as the NSE has over 60 counters that trade, you'll find that in most cases, the smaller counters or the counters that have a lot of retail participation might tend to tick up higher, and they tend to be very volatile. Yes, you're getting a return of 500% on one stock, but the major question is, we usually say we're in the business of risk management. The big question is, if this stock was to fall or things were to change, how low can it go? And the reason why we go for the liquid counters is because for KCB to fall like 10%, 20%, it takes a lot. But for these smaller counters, yes, they'll give you 500%, but the next day, how will we be able to manage the risk? What will we tell our investors when we're telling them, yes, we were chasing 500%, but you're now like down 30%. So the major reason why we focus more on the liquid counters is, first of all, risk management, to ensure that in as much as we're giving you the upside, we also need to control the downside. The other thing is about, we don't want a situation where we want to exit a stock, but we cannot sell. And that's a huge issue, especially in markets like the NSE, because we don't have market makers. So ideally, you need to make sure that you only invest in stocks that are liquid. And what informs the liquidity? We have what we call fund managers. The fund managers have a list of stocks that they tend to favor mostly. So you make a call and you'll tell them, hey guys, I want to buy or I want to sell KPLC or Kengen or these other stocks. And they tell you, we don't hold any KPLC, we don't hold any Kengen. So that's another issue. So you need to make sure that you have stocks that you can easily exit and you can easily enter, so that sort of turns more, or rather covers more of the risk management aspect of the fund. And I think that explains why, yes, we're doing well. We have the 500 returns, 500% and all that, but I think that explains why we need to stick to the counters that we are trading in.
Just in addition to that, right? So there's liquidity, but beyond that, what sort of process do you go through to decide it is this bank and not this other one? It is this, it is Safaricom, or it is this other one that I'm going to buy. at this point in time? Beyond liquidity, what else do you look at?
Okay, so let me start by the first aspect, which I'd already mentioned, which is fund manager holdings, which help us to profile the banks that we need to invest in. Then we have what you call the volumes, the trading volumes, the daily volumes of the stocks, how much volume do they trade on a daily basis. Then the other thing is we also look at the foreigners. What are they trading in, and what do they where are they positioned basically before us investing. Then we go deeper to the fundamentals. Is it overvalued? Is it undervalued? What's the fair price of that stock and all that? And then we go deeper to the technicals. I know many people talk about Forex, people and all that. We still use the charts. Yeah, the Forex charts you see are still used in every aspect of the market. So we look at the charts. So for the charts, we try to look at the patterns in the market. Is it the best time to buy? Are we seeing some form of a channel in the market? Is it the best time to sell and all that? So those are some of the aspects that we look at before making the decision to buy or sell.
Okay. I also wanted to add something, that an aspect that you'll find in the analysis that doesn't come into play. One is the cost of transactions. Yeah. So as much as we say in January this was at this price and exit is this price, if you are going to enter into that, there is obviously some transaction costs in terms of fees to NSE, fees to the broker, and also exit there is another fee. Majority of the, if I look at majority of the brokers, it's in and out, you're looking at 1.5% to 3% actually of the transaction cost. Can you explain further for the audience to understand that?
Okay, so I'm going to talk about the general aspect of fees. So you find that there are stocks that are kind of expensive to buy, and when you look at the return, or what we can call the yield of that stock, you find that there are stocks that don't make sense. They make sense in terms of the upside that you're getting, but the other question is how much are you paying for that upside? So that's when it comes to comparing two stocks. Let me give an example of Stanchart and KCB. So Stanchart is trading around sub 300, so let's say 280 to 80 bob. Then you have KCB trading around 50, let's say 56, and then you have COP trading around 20 bob. So a movement of 1 bob in COP will give you a higher return compared to a movement of 1 bob in KCB compared to a movement of 1 bob in Stanchart. So that's another factor that you need to factor in when looking at your investments. So let's say you have a fixed amount of money, let's say 100 million or maybe 50 million. So the question is, should you buy COP, should you buy KCB, or should you buy Stanchart? So there comes the issue of what's the return on the investment of the money I'm putting in. Right? So you need to answer that question. Yes, I'm putting a lot in this counter, but what's the return on the amounts, or how much do I have to spend to get the same return? So let's look at a situation where all the counters, you're bullish on all the counters. Ideally, when I say bullish, I mean you expect the counters to go up. So then the next question is, which one should I pick? And you only need to, let's say you only need to pick one. You'd rather go with COP if it has more upside compared to Stanchart in this case, because you'll pay less for COP for more return for the same stock.
So the other thing you said you do in your day is also look at international equities, specifically, I think you said international or NSE? I mean US.
US stocks, yeah.
US stocks.
Yes.
So now here's a Kenyan wondering, now when do you have time to look at all those thousands of companies that you could potentially invest in? And how is it that Kiambati, I can trust him with my money to invest in the US?
Okay. So let me start by saying that we have, same to what we have in Kenya. In the US, we have thousands and thousands of stocks, but what we do is we have like a profile of stocks, just the same way we do in the Kenyan market. So we have the S&P 500 index. So the S&P 500 index in the US, it's an index that tracks the 500 largest companies in the US. So we have already narrowed it down to the 500 largest companies in the US. So the next thing is to ask, among the 500 largest companies in the US, first of all, which are the companies that are traded the most? Which are the companies that are most profitable? So we sort of come up with, we can narrow that down to around 30 companies, the likes of Nvidia, the likes of Amazon, the likes of, let's say, Google and all that. And then that makes it easier to track them 30 most traded companies and the 30 largest companies and all that. And the other thing is, in terms of risk management for the US stocks, you also need to check the volatility of the stocks. So for the longest time, we have really avoided counters like, let's say, Tesla, because it has been really volatile. So that's another factor that we tend to look at. Yes, Tesla might be a good stock, but how volatile is it? Like on a day-to-day basis, is this a stock that's going to crash like 5%, 10% and all that. So that's another factor that we look at. But ideally, we tend to stick to companies, first of all, companies that are in the S&P 500, and then also what you would call the blue chips of the US stock market. Let me compare that to Safaricom here. Yeah.
Yeah. Okay.
So you're saying, what I understand is Tesla might be a very good stock.
Yeah.
It might have a very good upside, and it may be good for an individual to take, knowing that they are risking their money and they are willing to maybe put a certain amount at risk. But from a fund perspective, because we have collective people with various risk appetites, we are unable to actually aggressively take such so that we don't have a downside. That's what you're saying.
For sure.
Oh, okay. Thank you.
I think to add on to that, I think I can also mention why we don't trade the penny stocks and some of these AI companies that people are talking about. I think everyone is talking about quantum computing at the moment, and people are asking, why is Oak not in quantum computing? So it's the same thing of the 500% we were talking about in the NSE stock market. You might want to invest in these quantum stocks, but the question is, there's a lot of upside. We can go 100%, 200% up. The question is, what's the downside? And that's the question of our day-to-day. I know I'm going to talk about my day-to-day, and that's the major question. On a day-to-day basis, the first question is, yes, we're looking for upside, but how do we manage the downside?
Yeah.
Yeah.
Okay. So finally, perhaps you can just walk us through your day. You come into the office, what do you do? And then what does Kiambati do for fun?
Okay.
Beyond the stress, how do you get rid of the stress of these markets?
Okay. So I can say our day is made easy. Our day is made quite easier by what we do at the beginning of the month, as I had mentioned.
Yeah.
So at the beginning of the month, we allocate funds and we sort of have an outlook of what we're looking at for the whole month. So on a day-to-day basis, ideally what we'll be doing is monitoring what we have and also looking at, do we have new opportunities in the market? Do we have anything that we need to reallocate, or do we have something that has come up that we need to give attention to? So let me give just a simple explanation of what you do on a day-to-day basis. So I'll get to the office. The first thing when I get to the office is first reach out to operations and get a whole analysis of the funds that we have and our position in terms of what are the free funds that we have that we can invest for that day and all that. And then I'll also look at my book and the system just to see in terms of returns where are we and which asset do we need to sort of look at and maybe try to edit it and all that in terms of the returns, or is there something that we need to look at that has been losing money and we can reallocate that money to another?
So when you say edit, you mean either exit or
enter more. Yeah. And then we have the Kenyan market open, which is 9:31 a.m.
Yeah.
So when the market opens, then a lot of calls to mostly the other dealers on the other end, other traders, just to try and get a perspective of the market.
Yeah.
And this is specifically the equities market. So where stocks, who's buying what, who's selling what, what's the general feel of the equities market. So that's at 9:31 a.m. So by the time it's 11, you already have a picture of how the equities market is operating and if there are new opportunities I can take or if there's something I need to exit. Yeah. Then we have the 11 a.m. time frame where now we have the London traders coming in the market. So for the London traders, we are looking at Eurobonds now. We want to look at the Eurobonds, where are the yields, what's the outlook for the Eurobonds. So for this one, we have a lot of calls with traders outside the country just to get a perspective on how the Eurobonds are trading and what we are looking at in that period. Then, of course, lunchtime, a little bit of a break. So what I do, I think I'll have to talk about is I take a walk during lunchtime just to try and cool down the pressure and make sure that I'm ready for the next session. Then 2 p.m., so we are preparing for the close of the Kenyan market at 3 p.m. So towards close, we'll see a lot of volatility in the market, and what we do towards that time is basically trying to prepare for closure of the market and maybe reposition for the volatility that comes towards the end of trading of that day. We will find that some traders who are holding back, and then once it's towards closure of the market, they might want to now open up and put their orders in the market. So you'll see a lot of volatility. Then 3 p.m. the market is closed, so of course we do an end of day just to print what we call the contract notes. So they're basically the physical forms of what has traded, and we need to file them. And I'll also update my own Excel of what I bought, the prices, the updated prices, the closing price of that day. And with that, I can get now the daily P&L of that day. Now, we are around 3:30, 1 hour to the open of the US stock market at 4:30. So preparing for the US stock market, so I look at the pre-market movers. Let's say, let me give an example of this week. We've had AMD moving, I think around 20-30%. So I look at AMD, what's happening in preparation for the market open, the US stock market open at 4:30. Then 4:30, the market opens. Basically, just try to position yourself. If you need to buy anything, if you need to sell anything, you need to put your stop loss for the counters that you've taken. And if you need to take profits, you can put the take profit. And now 4:35, prepare to leave the office. And I think this is the other part that most people don't see. When I get home, I'll open my phone again, just look at the markets, just to see what's happening, any news. I also use a lot of Twitter a lot. So when I get home, so this goes beyond the office. When I get home, a lot of Twitter, I follow a lot of traders just to see what are the sentiments in the market, and also read a lot of articles on Twitter, recommendations and all that, just to get a perspective of what we're looking at in the next 1 month, 2 months, 3 months. Yeah.
Wow.
I want to throw it back. So we just hear jargon, people are trading. You're going home, you're thinking about trading. There's a question Rina asked. What do you do for fun?
Yeah.
Okay, I think this is the part where I smile the most. So for fun, I really love music, and I think I've done music for longer than I've done finance. So for music, I play the trumpet, and that's what I'll do when I get home most of the time, after I'm done with the markets and everything. I also like to listen to music a lot, so I listen to a lot of R&B, a lot of Afrobeats. At the same time, I also like maybe attending events, so I'll do that during weekends, attend music events, the likes of jazz festivals and all that. So that's another thing that I really enjoy. I think another thing that I enjoy is listening to podcasts. So I listen to a lot of podcasts, and I talk about podcasts, not market-related podcasts, just general conversations that people have, that I can just laugh and just forget about the markets. Yeah.
Oh, okay.
Wow. Okay, so we went back to a question I think I asked Ian in a previous video, and the question was, why do we charge 6%? Because that's why, that's a question we receive a lot. Why do we charge 6% management fee? You've seen, yeah? Yeah, I can't do what he does. Like, it's just too much. And we have a team. It's not just Anthony Kiambati. We have others, and hopefully you get to see them soon. But ladies and gentlemen, that is a peek into our back end, into our dealing room. And thank you so much for joining us and entering our hood with us. God bless you guys and have a wonderful day. Take care.